There are many problems in the modern housing market, but the biggest one for Americans tends to be the price.
Prices rose 40% from the start of the pandemic.
In the final quarter of 2022, the typical U.S. home sold for a record-shattering $468,000. That's unaffordable for most Americans, leaving them to rent.
The housing costs are completely out of line with wages.
Some members of Congress believe Wallstreet is a part of the problem.
What's outrageous is your tax dollars are helping Wall Street buy up single-family homes. You're subsidizing Wall Street.
Massive private equity firms like Blackstone and Pradium Partners have backed a relatively new breed of homeowner, the corporation. This growing industry buys or builds single-family homes and then rents them out.
We hear from community organizers that are door knocking in certain neighborhoods and are just surprised by how many of the homes on a particular block will be owned by a corporate landlord.
Industry advocates say corporate landlords play a critical role in addressing the nationwide housing crisis.
What we have in housing in the United States is a chronic shortage since the financial crisis.
And so the question really is, how do we fill that gap? Is the answer incentivizing new housing development, new housing investment, new market participation?
What's behind the rise of corporate landlords? And how, if at all, will the government regulate them? As of 2023, corporate landlords only command a small portion of the rental housing in this country. The vast majority of all rental units, including apartments, are owned by individual, small-time investors. But there's growing focus on single-family homes.
Institutions, large companies, only account for about 1% of all the rental housing in the United States and only about 2% of the single-family rental housing.
There's a small but mighty group of companies that lead the industry.
So Pretium is the parent company for a company called Progress Residential that owns about 90,000 homes. They were started by Don Mullen, who came out of Goldman Sachs' mortgage group. Invitation Homes was started by Blackstone, but Blackstone sold their position a long time ago. They own about 80,000 homes. American Homes for Rent, which was started by Wayne Hughes, they own about 60,000 homes. There's a company called Tricon Residential that's out of Canada. And then there's one called Amherst. Those are the big five.
In recent years, corporate landlords have been most active in the Sun Belt. In 2021, corporations bought 28% of all the homes sold in Texas. That figure was 19% in Georgia and 16% in Florida. Companies like Pradium and Blackstone target these markets. Blackstone in particular has held large stakes in several companies that dominate the region. Rent hikes for single-family homes in this region have outpaced other parts of the country. Since the onset of the pandemic, rents for a two-bed detached home increased about 43% in Phoenix. They're up 44% in Tampa and 35% in Atlanta. That's compared to 24% nationwide. Experts say that many of the properties bought up by institutional groups were previously owned by people who were destabilized in recent recessions.
After the pandemic,
I am Tisha Paul. Folks, go ahead and hit that free like and that free subscribe button. You've just been watching CNBC and they're telling us what's going on in American real estate. As you know, if you candlestick and chart those stuff, you know that real estate is an asset and the playing field has changed. Wall Street now owns a lot of the single family homes in the United States. But there's hope for us. We can look at townhomes. Townhomes average $250,000 in the United States. 3 ways to buy a home in America. We're about to tell you. Listen for the next 6 minutes. Folks, go ahead and hit that free like and that free subscribe button. That way we could bring you more real estate news. And go ahead and check out the tag products from Neiman Marcus. They're gorgeous and they can be shipped anywhere in the world. Okay, so you want to get rich? The first way to get rich is to know your net worth. Okay, this is how you figure out your net worth. Assets minus money you owe to the bank, your creditors. That is how you get rich. Your asset subtract all your debt. So let me show you 2 ways it's going to look. It's always going to be like this forever. Calculate your net worth every year. That's how you get rich. Count your money. Okay. Assets, let's say your car and everything you owned, all your asset is $80,000. However, you have a loan from the bank that's $30,000. You would subtract 80 from 30, and that's your net worth, 50 grand. Look at this one though. 80,000 is your asset, but you owe the bank 100,000. Your net worth is negative 20,000. So don't worry too much about the positive, negative, especially when you're young. Eventually it will go higher. But you need to know your net worth in order to know your wealth. So you check that every day, and that's the calculation the lenders use. Okay, so as you can see, the average townhome is $250 per year. You will need 3% for first-time home buyer. 3% of 250 is $7,500. Where will you get the rest of the $242,000 from? You get it from a lender. There are 4,800 lenders in the United States. So you have to, it's a numbers game. You've got to keep calling, and you got to keep till you get a pre-approval. You must get a pre-approval before you go to look at a home. A serious seller will not show you a property unless they know you've got money. So you need a pre-approval. So go to your lender, complete a loan application, and the lender is going to ask you for a down payment. Here are 3 places to get a down payment. Zillow is offering a 1% if you can match 2% in the Phoenix, Arizona area. Zillow is going to go ahead and do that in more areas. So that's an area you can get a 1%. Government grants, that's another 2. Number 3, you have to save. You can save $7,000 US. How about you put away $500 per month? Then you'll have enough. Within 24 months, you should have enough to do the down payment. So let's say you have the $7,500. You're going to go to your lender. They're going to pre-approve you. So you do 75, they'll do 242.5. Whatever interest rate is at, you'll be paying a mortgage at 30 to 40 years. Okay, everybody pays for 30 to 40 years. There's ways to pay it down. Well, look at the stuff that we're showing you. You're going to need credit score, bank statements, tax returns. Don't be intimidated by this. The lender needs to do a due diligence. The lender wants to make sure that you can afford the mortgage payments. So just relax. Get the lender the 6 months of bank statements. Get them the 2 years of recent tax return. If you're self-employed, the lender will have a special program for you. But the lender must check your numbers to make sure. So there's 2 qualifications. The lender qualifies you as the borrower, and the lender also qualifies the property. The lender wants to make sure the property is appraising. Now you might be saying, why are you showing me the 3%? What about the closing costs? We assume you're going to finance the closing cost. Okay, so let's say you borrow $242. That will be your principal and interest per month if you're at a 30-year, and that's at 7%. If mortgages go down, you'll be paying less. So we're just using the 7% number. Then we did it's 8% for the 30 years and 7 for 40 years. It is okay to get a 40-year mortgage. It's okay to get a 30-year mortgage. Paying 1 or 2 payments extra per year will bring it down. So the first thing you need is a pre-approval before you can locate the property. Stop looking at single-family homes, because we know Wallstreet bought up a lot of them based upon the charting of the candlestick. Real estate is an asset. Start looking at townhomes. Townhomes are attached to the property. It's still, you can get a 3-bedroom, 2-bathroom. You can get 1,300 square feet. Townhomes do have maintenance fee, and it's not a freehold estate where it is still a freehold estate. It's just attached property. So you are sharing some common elements with your neighbors because it's attached. All right. Look into villas. Villas are flats that also are attached to the property. So we need to start thinking different about real estate. Get yourself a pre-approval and look at the charts. We're showing you what the lender likes, and we're showing you what the mortgage will look like, and it's paid every month Obviously, when 30 years or 40 years expires, then the payments go down, or you pay extra to get the payments down. We'll talk more about real estate. Go ahead, folks, and hit that free like and that free subscribe button. I'm Tisha Powell. Thank you so much for watching. We'll be back tomorrow with real estate news, stock news, and more money news.